Hello everyone, please get your worksheet for trade receivables decrease right now. We'll go through parts by parts over here. So let us start off with the first question 1A. Over here the question is asking you to determine the percentage used for the accountant to estimate the allowance for impairment of trade receivables. And over here we know that we are required to find this percentage. So if you look at the question over here on the 1st January 2020, they actually give you the trade receivables balance and also the allowance amount. So what you have to do is to simply take this $5,000 allowance that's determined by the accountant or given by the question and divide it by $100,000 to give you this 5%. Okay, it's pretty straightforward. Okay, this 5% is the answer. Okay, if you get it, you get 1 mark. So let us move on to 1B. So 1B over here, they're asking you to prepare journal entries to record the following transactions in Ricola Trading's books. Okay, there's 2 dates, okay, 12th October and also 31st December 2020. Okay, in this chapter, you should know that there's only 2 kinds of journal entries that we're learning so far. Okay, whenever you see trade receivables, it means that it is the journal entry for the writing off. Okay, writing off of a debt occurs whenever the customer closes down or goes bankrupt. We know for sure the customer can no longer pay you back. That's why we are crediting straight to the trade receivable. The other journal entry they learned for this chapter, okay, is this pair of journal entries: the allowance for impairment of trade receivables and also the impairment loss. Allowance, remember, is an opposite asset account and impairment loss is an expense. Okay. So, and this occurs every year at the end of year. Okay, where the accountant will estimate the allowance, okay, the allowance for impairment of trade receivables balance that the business books should have. In this case, we know that it's 1.7k. Over here, we know that it's 3.1k. That's why at every financial year end, the accountant will then need to create this adjustment entry to make sure that the allowance matches that of the desired ending balance that the business books should have. So let's go back to the question. 12th October, okay, over here, Leonard Limited, which owed $1,000, confirmed that it was ending its business. So over here, know that the business is closing down. However, the business, Leonard Limited, is able to pay 20 cents for every dollar. And by this, the question actually means that Leonard can pay back 20% of the debt, okay, of this $1,000 debt that they owe the business. So in this case, writing off, okay, you should be reminded that whenever you hear writing off, okay, confirm this journal entry will involve the trade receivables over here. Okay, in this case, because they owe $1,000, okay, and they can only pay back 20% of the debt, so these 2 journal entries should be pretty straightforward. So we credit off the $1,000 because we no longer expect to receive this amount from Leonard Limited because they're closing down. And then because they pay back 20%, so we debit $200 to your cash at bank because they paid by check, as mentioned in the question. And over here, because they have already closed down, so the debt is no longer deemed to be uncollectible, but now it is confirmed to be uncollectible, so we no longer need this allowance over here. That's why we are crediting off this allowance by $800. Okay, for the December 31st entry, let's go back to the question. Okay, 31st December 2020 over here. In this case, the percentage that the accountant used to estimate the ending allowance, okay, we know from 1A is 5%. So 5% times $120,000, it will give us will tell us how much the desired ending balance as of 31st December 2020 should be. In this case, it is $6,000. So start of year, the beginning balance for allowance required is $5,000. End of year for the first year is $6,000. So in this case, okay, let's go back to the 4 basic steps. So over here, from the question, we know that the beginning allowance for impairment loss of trade receivables is $5,000 over here. Ending balance as of 31st December 2020 is $6,000. And during the financial year, 2 customers actually went bankrupt or closed down. So firstly, from Shami, okay, Shami filed for bankruptcy and we have a write-off of $250. And the next one is Leonard. okay, but the write-off is not $1,000. Instead, it's $800 because they paid back $200, okay, if you recall. So after writing off, you know that the balance of the allowance is now minus 250 minus 800. You will be left with 3950. Okay, but in this case, we require ending allowance of $6,000. So you need to increase this balance, right? And we increase it by doing this debit to impairment loss and crediting our allowance, our OPA account. So we need to increase it by $2,050, okay, $2,050 to reach this $6,000 ending allowance. So let's now take a look at the question, the answer for 1B, okay, which is here. Basically, for adjustment amount, please remember the formula that the teachers has been sharing so far. Okay, let me repeat again. It will be the new balance, new allowance balance, okay, minus your O or your original beginning balance minus your write-off, okay, any amount of write-off that occurred. Okay, please recall that to calculate adjustment, you can use this formula, which is your new balance, minus off the beginning balance, bracketed minus write-off. Use this formula as shared by our teachers. You should be able to find the adjustments. Please remember that for this formula, if you get a positive amount, it means that you are supposed to increase the allowance. However, if you get a negative amount as shown at the next year example, then in this case, this will be a reversal entry. Adjustment positive, credit allowance. If it's negative, it means a reversal and you are debiting the allowance. So now let us move on to the part C. Prepare a journal entry to adjust the balance of allowance for impairment of trade receivable balance for 2021. So let's see what happened in 2021. This event is on 5th of June 2021. You know that Rice Co., one of the customers, actually ceased business. However, the business actually managed to receive $4,000 from the customer, and the remaining was written off, which means we are not going to receive the $560, right? So in this case, we need to write off this $560. So let's update the information over here. Beginning allowance in this case, 1st January 2021 will be $6,000. We know 6,000. Ending allowance will be this 85,000 times the 5% we have obtained in 1A, which gives us a 4250. And the write-off that happened for the year, because the customer can pay back 4,000, so the write-off will be only $560. After minusing off 560 from 6K, our remaining allowance for impairment loss of trade receivables will be 5440. So in this case, we need to reduce the balance, right? Because the desired ending allowance is only 4250. So in this case, if we use the formula shared by the teachers, the new balance 4250, and you minus the original balance, the old balance, minus the write-off amount. This is a formula by the teachers, and this will give you the amount of negative 1190. And when you see negative, if you use this formula, you should know that we are going to do a reversal of impairment loss on trade receivables. So let's take a look at the answer from 1C over here. As mentioned, it is the formula that we used just now to find the adjustment. It's basically the opposite of the journal entries on the top, or reversal. And I think the majority of you actually miss out the marks for this journal entry. Please take note. Negative amount, if you use the teacher's formula, it means reversal. Positive amount means the normal debit impairment loss and credit allowance. For part D, they're asking for the second year's statement of financial performance. So the value is directly over here. Okay, because over here at the end of the financial year on 31st December, we're actually doing a credit to impairment loss. So this is an expense account, and when we credit expense account, okay, expense will drop. So in this case, we have to put this negative balance. Okay, if you're not sure still, you can actually refer to textbook. Okay, and remember these two words, reversal of. Okay, you have to include these two words, reversal of. Otherwise, no, you won't get this 1 mark. Okay, always recall only income and expense accounts will affect your statement of financial performance. No other values and no other accounts will affect your statement of financial performance. So moving on to the statement of financial position for the second year. Okay, actually for this part E, you can do this question even if you got the previous parts wrong. Okay, because the question has actually given you 85,000 for trade receivables balance. Okay, and this 5% you actually got this from part 1A. So what you have to do is just take this 85,000 minus the accountant's estimation of the allowance for impairment of trade receivables, and you can get this answer. And that's how you can secure the 2 marks for this part E. For part F, okay, this is actually knowledge from your Sec 3 work. You're supposed to prepare a ledger account for Dion's account. I noticed some of you has written the balance breakdown for trade receivable as 100,000, okay, as given from the question. This is actually not accurate because over here we are preparing Dion's account. Okay, however, the $100,000 that the question has given you is actually the balance for all trade receivables account. But over here we are only interested in Dion's account, so the balance breakdown, if there's any, should be only 0. So let us read what happened during this month of February, because they say plan for the month of February only. So in this case, let's see. So goods to Dion on credit at least price $1,200. So in this case, if you know that the lease price is 1.2k, the invoice, okay, the amount that we charge Dion as a customer, okay, invoice price should be 1200 times how much trade discount? Okay, only 10% trade discount. So the invoice price 100 minus this 10% discount, okay, will give us 90%, 1080. So we are expecting Dion to pay this amount if let's say she don't make the payment within the 10 days. Okay, this is the day where the sale occurred, so there should be no cash discount being recorded. There should be no discount allowed or discount received as of this day. Okay, the journal entries involved is only your sales revenue, or in this case, you need to do a debit to trade receivables Dion and do a credit to our sales revenue, because I still notice some of you giving me inventory, but that shouldn't be the case. Inventory and cost of sales are related to the cost price. In this case, no cost price is given in the question, so we only need the pair of journal entries related to the selling price. Okay, the selling price in this case, after trade discount will be 1080. Okay, 1080. Okay, so over here on 12 February, okay, debit to trade receivable Dion, credit sales revenue. And if we look at the answers, okay, this is how it is. We just need to debit to trade receivables 1080, okay, and credit our sales revenue by 1080. Okay. On 15th of February, okay, when Dion actually makes the payment, okay, is a little bit different, because in this case, from the invoice price 1080, we then have to give a further cash discount of 5% because they made the payment within 10 days, right? Only 3 days later they pay, so it's still within the 10 days period where they can receive the discount from us, the business. Okay, so in this case, we just need to give a debit to Dion, okay, 1026. because we only received this amount of money from Dion because she's enjoying this discount. Okay, as we are giving the discount, the customer discount, we are expecting to receive less money. So in this case, we need to record this expense account called discount allowed. Okay, and thereafter, there's no longer any debt from that we're expecting to receive from Dion. Okay, however, for February 18, something else happened, right? So February 18, the bank has actually informed us that this check from Dion is rejected. So on 18 February, as we look back to the answer, what we have to do is rather simple. Okay, we just have to reverse whatever we have done on 15th of February on the payment. Okay, this is sales occur, the day that sales occurred. February 15 will be the day that payment is received, and February 18 is the day that the bank informed us that the check is being rejected from Dion. So we just need to add back the debt from Dion, because we treat it as whatever that happened on 15 February has not occurred before. So we just need to reverse the entries, and remember to include these labelings where these reverse entries are due to dishonored check and the discount allowed is actually withdrawn. And then we go back to the balance brought down, the first day of the next financial month, which is 1080 debit. So let us move on to the part G. Okay, this is where you'll be tested on the interpretation of the entries in the allowance for impairment of trade receivables account. So in this case, if you ask me, okay, it's true that technically you can memorize the answers, or I should say memorize the techniques to use for these chapters interpretation questions. So once again, allowance is opposite asset account, so debit will be minus, and because it has a credit nature as of opposite of asset, it will be a plus. So once again, repeat myself, whenever you see allowance and trade receivable entries coming together, it means that this is a writing off entry. Okay, means that most likely ZealCo has either closed down or went bankrupt. That's why we are doing a credit to trade receivables. Okay, and this one is the financial year end, okay, where the accountant review the trade receivables balance, and he has to adjust the allowance for impairment of trade receivables balance by either increasing crediting to this account or reduce by debiting to this account as shown on this day. Okay, this is basically the three kinds of entry that can be tested for interpretation for this chapter. So let's take a look at how you should answer the questions. Okay, I'll be honest and tell you that the answers can actually be found from the textbook. But what's difficult is remembering the way or the strategy to answer the questions. So over here you have to give the reason. Okay, for A, we know it's writing off. Okay, writing off. Okay, we have to give. Okay, you can either say ZealCo has ceased to operate, or if you want to say that it has went bankrupt, okay, you're not wrong also, and you'll get the marks still. Okay, and talk about bankruptcy also, ceased to operate or went bankrupt, and the business then need to write off this outstanding amount of $550. Okay, please remember to always include amount, okay, of the transaction in your interpretation, because notice some of you tend to miss out the amount. And what's even more saddening is when I see some of you even skipping this question, because you are straight away losing the 6 marks from this portion. Okay, so for part B and C, they are interpretation of a similar nature. Okay, this is where at the financial year end, the accountant will do the review on the trade receivables balance. Okay, in this case, I'm being a bit generous, can offering 1 mark. Okay, if you have written that the business has reviewed its trade receivables balance. And then next portion, we have to talk about the adjustment. So okay, the accountant will then have to adjust by, you have to mention increase or decrease. This is where you get the second mark for the interpretation questions. Okay, and by how much. So over here you can see that the yellow colors are the keywords that the teachers are looking out for. Okay, you can miss out certain unimportant details, but the yellow color portions are the parts where you really have to write down inside. Okay, so now shall we move on to 1H, okay, the last question that offers 3 marks. State the effects on current assets, other expenses, and profit. Okay, we know that current assets are affected because allowance for impairment loss on trade receivables, okay, is an OPA account and is paired to trade receivables. Okay, other expenses, okay, is due to the impairment loss on trade receivables and profit. So before we move on to part H, so let's take a look back at the, okay, this is what I mean. Okay, impairment loss will be under other expenses, right? If you record impairment loss, it will be expense. Reversal will be reduction of expense. Okay, I repeat again. Impairment loss will mean increase in expense. Reversal will mean decrease in expenses, shown in brackets. And allowance will actually bring down the balance of trade receivables. See? Bring down by, you just minus off the allowance balance, and this is the net trade receivables that the business have. So, if let's say we don't do, okay, what the question is asking, if let's say, so if the transaction on 31st December 2019 is not recorded, meaning this one. Okay, if this is not recorded, okay, you know that this is a reversal 750, because we know that we are debiting to the OPA account and crediting expense. Okay, over here we are crediting to expense, which means we are reducing the expense, right? And in this case, okay, we will debit the allowance, which means allowance balance is decreasing. So if let's say allowance decreases, okay, allowance decrease means trade receivables will increase, right? Okay, however, if we don't record, okay, this increase, then current assets will be understated by 750. Okay, in this case, okay, is we are assuming that we're not going to record this reversal, means no reduction of allowance took place because we never record this reversal entry of 750, right? So no reduction of allowance for, okay, impairment loss of trade receivables occurred. Okay, worth 750. Okay, it didn't take place. So if it didn't take place, right, then current assets will be understated by 750. Okay, over here for other expenses, no reversal. Okay, if it didn't happen, assuming the 750 was not recorded, no reversal of impairment loss took place. Then no reversal meaning, okay, other expenses, okay, will be overstated by 750. Okay, let me highlight the key answers for you. The one I typed out was is the explanation from me to you. Okay, the ones in the yellow is the ones that will give you the marks in the exam. Okay, and if other expenses is overstated by 750, naturally profit will have an opposite relationship to expenses, right? Then profit will be understated by 750. Okay, if you're still not sure about this part, you can ask me in class, okay, where I can explain it to you in a clearer way. That's all I have for now for this question. So hopefully this video has helped you to do the corrections for this question. Thank you for your time and goodbye.